So maybe, as we are waiting for the slide to come on screen, later on you will see that the Natural Disaster Fund is at the center of the slide. You can picture this to be a risk pool for the purpose of protecting the poor and the vulnerable against natural disasters. That's not the slide I'm waiting for, actually, so please, please look for the right picture. So the Natural Disaster Fund it enables intermediaries working with the fund to design helpful products, and it underwrites risks attached to these products. And both the German government through KfW and Great Britain as the second donor are invested in the Natural Disaster Fund. So please, technical support, I would be grateful for our slide. So let me wait a second, just keep cool. I guess these are these types of hiccups we have to deal with these days. Next slide, please. This one. So, yeah, we will be speaking and we will be getting to know InsuResilience Investment Fund. It has a size of $250 million and was launched in 2015. The fund is the first private sector investment fund that invests in companies working towards providing financial protection against climate change to poor and vulnerable. The next slide, please, and then we are perfectly in business. Thank you. Yes. So for everyone else, I was talking about the Natural Disaster Fund in the center, and now I moved up to the InsuResilience Investment Fund. So this fund is providing financial protection for households as well as small and medium enterprises in developing countries. And we have Felix Hermes with us. He will be talking to us as a member of Blue Orchard's executive management, and he is responsible for the private equity investment activities of the InsuResilience Investment Fund. Felix has over 20 years of experience in investing and shaping asset managers and financial service organizations. As you can see, the InsuResilience Investment Fund is invested in global parametrics. And Global Parametrics is managing the Natural Disaster Fund in the center. We are very pleased to have Hector Ibarra with us, and he is the company's CEO. Hector is responsible for building the strategic and operational framework for Global Parametrics' key business lines. And that is basically fund management as well as product development. He has over 15 years of experience in driving innovation and market development efforts for leading multilateral agencies, financial intermediaries around the globe, and national and regional governments. And now we turn to the bottom of the slide. There we have Hannover Re, who is providing reinsurance to the Natural Disaster Fund. I am very pleased to welcome Henning Ludolfs, who has been with the Hannover Re Group for more than 30 years and is currently Managing Director, Capital Markets at Hannover Re Global Reinsurance. He has focused on structured reinsurance transactions since 1991 and has built a new department focusing on effectively transferring reinsurance risks to the capital markets. And finally, what is a product? What is all this without a client? We are very, very glad to learn from Eleonora Castaldo from Enabling Capital, an impact investment asset manager. Enabling Capital receives risk cover from the Natural Disaster Fund and support in product development from global parametrics. Eleonora gained many years of finance expertise with Blue Orchard and founded her own fintech startup in Myanmar. So now we know how everybody is interrelated. And so Felix, let me start with you. 2 questions for you. And I will ask them at the same time, and then you can improvise in answering. So first of all, let us learn about the InsuResilience Investment Fund's investment philosophy. So what is so attractive about global parametrics? And then the second question, from the fund's perspective, what was the fund's key success factor in attracting experienced private sector investments such as Soros Economic Development Fund or various pension funds? And how can you best build on these accomplishments in the future? So Felix, the floor is yours.
Thank you, Barbara, and good morning, everyone. Well, maybe just starting to answer the first of your several questions, I think, how does global parametrics fit into our investment philosophy? So the objective of the InsuResilience Investment Fund is ultimately, of course, to contribute to the protection of poor and vulnerable people in emerging and frontier markets from climate risks and extreme weather events. And this is ultimately very much a market-building mandate, so really about building the value chains for climate insurance and microinsurance in particular. And here global parametrics is a very important element of the value chain because they have capabilities in terms of data modeling, but also risk structuring, and of course with the Natural Disaster Fund, risk capacity for risk transfer, and with a particular focus also on emerging and frontier markets. So it's really a business model and capability that helps build climate resilience across, well, globally, potentially, and across various value chains. So it's a very important element of the value chain. The key attraction in terms of attracting experienced capital, the key point, I think, was really the mandate, the specific mandate. I think investors in particular, of course, impact-minded investors that are familiar with this space really recognized the unique nature and objective of the fund, and therefore were willing to support it really primarily for the impact that is going to be achieved building those value chains. On the other hand, the challenge in attracting the investors was that such strategy has no track record, or had no track record from an impact perspective, but also financially. And here, I think the de-risking provided by KfW and BMZ as the sponsors of the mandate was certainly essential in terms of making it easier for investors, in particular private investors, to join us on this journey. And we're quite happy to have achieved proof of concept at this point. And that's also, I mean, in the sense of how are we looking forward to build on the experience and track record of the first fund. It's really, on the one hand, we will, of course, continue to work with the current investees that we have in the portfolio. That job is, of course, not done. So we continue to work with them and help them scale their impact and insurance solutions that they provide to poor and vulnerable people. On the other hand, we're also working on the second fund on the private equity side in particular. And here with this fund, we're, of course, looking to reach new markets that we have not invested in before, but also potentially invest in markets that we are invested already, but to strengthen different parts of the value chain that we have strengthened already. And also, I think as our portfolio of company grows that is active in the space, I think there's also increasingly the important component of facilitating knowledge transfer between portfolio companies, because there are important learnings and I think several challenges. All markets are different, but some challenges are similar across markets. And I think here we can be quite valuable in facilitating knowledge exchange. So I think there's plenty more to do in terms of impact. And now we have proof of concept, and we hope to therefore also bring new investors into the second fund based on the track record that we have on the impact side, but also financially, and continue strengthening value chains globally for climate insurance.
Okay, thank you, Felix. Then over to you, Hector. Congratulations. Global Parametrics has been ranked the #1 innovative insurtech in Europe by a leading sector site and magazine. So Global Parametrics manages the Natural Disaster Fund, which has proven to be a very successful public-private partnership. From the investee perspective, in terms of the InsuResilience Investment Fund, what do Global Parametrics and the Natural Disaster Fund offer to clients working with poor and vulnerable populations? And how do they cooperate to achieve just that? Can you tell us a little bit about your work and how you interrelate?
Yes, thank you, Barbara. Good morning to everyone, and thank you for your kind words about the award. I think it's a reflection of the effort of all the people that you see in the screen and all the partners. So thank you to you all. I think it's important for us to acknowledge that when you're trying to build the supply chain, as Felix referred to, of the risk transfer markets, so specifically insurance, it's important to keep in mind that there are different components for that, and that private sector is not only looking to invest in isolated companies, but they're trying to build an ecosystem that collectively can have a higher likelihood of succeed in terms of building this market. So you need to think about what are the market gaps and how you're trying to address them, and how you can offer a service of value to the client. And what the client needs, I mean, risk transfer or the structuring of insurance solutions can be challenging. I mean, it can be overwhelming for clients. There's a big data component involved in that. There's a regulatory component in that. Then there's the area of innovation of how you're trying to use insurance to achieve impact. Then is the element of how can you engage reinsurance and risk capital, because it's important when you're dealing with catastrophe portfolios to be able to have the appropriate reinsurance. So you need to put all these elements and package them for clients to be able to pursue. If you try to bring new clients and try them to tackle all these pieces in isolation, it can be very difficult. So the whole idea of the Natural Disaster Fund, the partnership with IIF and FCDO and BMZ, is to have like a one-stop shop for clients who have a vision of change, where they're trying to enable a vision of how risk transfer can add value in the respective value chains. It can be financial intermediation, agribusiness, social protection. There are different agendas, renewable energy. So if they have the vision, the idea is that these umbrella of organizations can help them achieve that vision by having the capacity to complement the data needs and close that gap, to be able to give them innovative structuring services, to have patient capital that will allow to incubate concepts that in areas of the world where there might not be enough track record, and have the risk, the participation of reinsurers, so you're crowding the private sector and the programs can grow, so you're seeding sustainable products into the market. So I think what we're talking about today is how do you package everything and create that ecosystem. So hopefully I'll address your answer.
Yesterday, actually, Hector, we learned from Professor Banerjee that one issue with climate risk insurance for the poor and for the vulnerable is actually to have a level of trust everywhere and to keep the products simple. And you actually explained very well to us how complex this world is, given data, given regulatory issues, given the structuring issues, etc. So I know that you are also engaged in product development in a very innovative way. How do we actually manage to have simple products for the ones to be insured at the end, keeping in mind this complex ecosystem?
So I actually just arrived on Monday from a field work in Mexico with a lot of retail brokers and distribution channels, and trying to learn how they process the product offerings that we do in terms of parametric insurance, how they communicate this to clients, what are the trade-offs. I have to say there's still a lot of work to do. I think we have advanced a lot in trying to have, like I say, a one-stop shop for people to engage on parametric insurance, but what is still work to be done is how you bring this technology to distribution channels that are closer to clients to make sure that they can communicate the information about the different product offerings, do a transparent discovery of what are the trade-offs with different designs in a simple way. And a lot of these distribution channels, what we found is like they are like old insurance kind of mentality. So they're not prepared to take advantage of data and take full and leverage the technology that is involved in these new highly big data products like parametric insurance. So I think there is still a big important job in trying to build these distribution channels. And I'm seeing Felix, because this is an area of opportunity for Felix also, to try to create like the new retail channels of the future, or the new aggregation channels, more like with an insurtech philosophy, so they can process data, they can really turn this knowledge in a more systematic and simple way. So I think, again, the reinsurance sector is very engaged. We have solved a lot of the issues on product design and data and agreeing on pricing principles, but what we need to be able to now go further is how do we go down the stream into distribution channels that bring this knowledge closer to the communities.
Well, thank you, Hector. So it's about working on the last mile, so to speak, in order to achieve that. So now, Henning, over to you. The Natural Disaster Fund is backed by leading reinsurer Hannover Re as the first private sector risk capacity provider in this venture. So what was your rationale and motivation behind joining the initiative? And what has been your experience of working on this as partner of a true insurtech like Global Parametrics?
Yeah, good morning, good afternoon also from my side. There are a couple of reasons, and I'll start with a more general one. That we are generally a believer in public-private partnerships. Why is it so? There are two parties with a very different infrastructure and a very different set of capabilities. And if you manage to bring these two together, you may get more out of it than just the sum of the two individuals. Let me give a couple of points here. Governments, we believe, are much better equipped to coordinate with NGOs and other semi-government institutions. They have access to a vast number of people, may better know the needs of the people. Governments can put in risk management measures which help to mitigate actually the impact of risks. And of course, they have or can get access to data, and data is utmost important, in particular for parametric solutions. A lot of these things the private sector doesn't have. The private sector, on the other side, has money, private money, translated into risk capacity, has know-how and experience on structuring insurance solutions, has an infrastructure to facilitate certain movements of risks, and if we come to very large risks, has ability to get more risk capacity, for example, via capital markets. Another reason why we like this is we believe that parametric solutions with a fast payout are really the most effective tool to mitigate impact from natural disasters, in particular in low and middle-income countries. Number three, it's probably more an internal thing, but for private sector, it's important. Our own strategy clearly says that help to close the protection gap is important. So from an internal motivation, at least I and my teams got the support to work on this. Last but not least, we believe in the functioning of the NDF, and which we can say now it has proven almost, and we believe in the capabilities of global parametrics. Let me come to global parametrics in a second. We also like that the NDF has strong support from two governments, from the German government via the KfW and from the English government, which shows also, in our view, the vested interest behind it. And from the Hannover perspective, it allows us to get access to new and diversifying risks, which again is of interest to a reinsurer. Barbara, you said, how is it the experiences working with a true insurtech? I'm almost a bit surprised when I should answer this question, because I haven't seen global parametrics as a pure insurtech. Yes, they are all components for an insurtech. They have the data, they have the access to the data, and they have the ability to use the data to create solutions, which is all really factors for an insurtech. But we believe there's more. There's conceptual expertise. Sometimes we believe they're even a kind of think tank for parametric solutions. They have actuarial and structural knowledge. They have the network, and we think also the ability to work with governments and NGOs. They are able to manage the NDF. And they are not just looking at the NDF, but they are capable, in our view, to build up an ecosystem around the NDF with new and more ways for us getting to new risks, for the protection gap, to find more solutions. However, there's one little piece which is probably the most important of all, and last but not least, the cooperation between global parametrics and our teams from Hanover work well. Sometimes you have two people, great ideas, and if you join them, it could work, but it doesn't work because the people can't go along each other. In fact, it took us 2 years, global parametrics and us, to structure all around this NDF. We had legal, regulatory, accounting, structural, economical aspects. And through these 2 years, with a respectful and a mutually supportive spirit, we have managed to get something done. And I think this is a good thing. It's easy to talk about how to make things great. It's not easy to put them into practice, and I believe we have something. Somebody could say, yeah, why do you work with global parametrics? Do it all yourself. I think this is probably not possible, even if you would do so. We need for the NDF a lot of capabilities which a private sector simply doesn't have. Also, even if we would start thinking of getting some of this know-how ourselves, it's probably not economical. It's more economical to partner up with someone you can work with and then create these solutions. Barbara, I hope that I have addressed.
Yeah, well done, Henning. No, also very illustrative for us to also have a look inside Hannover Re and learn about which decision criteria you used in-house versus partnership. And also nice to know that the personal aspect of your cooperation also contributes significantly to your success. So over to you, Eleonora, from a client's perspective, how do the natural disaster fund products help enabling capital to reduce its climate risk and that of the microfinance institutions, your clients, whom you serve? So over to you, Eleonora.
Yeah, thank you, Barbara, and good morning, everyone. I have a couple of slides. I hope they can be pulled up to help me, let's say, explain how we worked with global parametrics and how we designed our product. But in the meantime, let me start with a short introduction of Enabling Capital, just to set the stage. So Enabling Capital is an impact investor. We started operating in May 2020. We currently have over $300 million in asset under management. We manage, among others, one fund that's called the Enabling Microfinance Fund that provides debt financing to financial institutions in emerging markets. Investors in this fund are all private, including mostly institutional, retail, and high net worth individuals. We started collaborating very early on, I would say from the very beginning, with global parametrics and their natural disaster funds, as we realized pretty quickly that almost all of our countries of operation are often affected by extreme weather events, and we wanted to find a solution for that. So if we move to the next slide, the first thing we, next slide, please.
There is a slide delay, so yes. There we go.
So we started looking at how the various actors are affected in case of an extreme weather event. And first of all, the first being affected are end borrowers, mostly smallholder farmers, that are the most vulnerable to shocks and will typically have issues repaying their loans. So they would not qualify for new loans exactly in the moment when they would need those the most. Financial institutions, on their turn, they will have issues collecting repayments. They might have liquidity issues in the sense of accessing new funding or getting funding, but at higher rates. And they will typically become more conservative on their lending approach, sometimes stop lending altogether, and might incur losses and have their capital eroded as well. On the lender side, so our side as well, what we typically see is that lenders limit their exposure after a natural disaster or charge more for new funding. So we wanted to find a solution and a tailored blend of multiple financial tools that could help solve all of this. And if we move to the next slide, so we worked, in fact, with global parametrics and their NDF fund to try to solve this issue. If we can move to the next slide, please. So I guess, here we go. Well, the thing we have done was, in fact, putting together global parametrics and the financial institution so that global parametric could structure a climate and disaster risk index that is tailor-made to the financial institution geographic presence and portfolio composition. Think, for example, as an index based on excess rainfall in a certain area. On the basis of this index, we pre-agreed on certain payment thresholds and amounts and defined an insurance that is provided by the NDF to our fund, EMF. With the backing of this insurance, EMF was able to offer a bundle of products that solves all the issues, or try to solve all the issues we mentioned earlier. So in case of a weather event of a certain severity happened, say rainfall this year exceeded the average rainfall level of the last 10-year period, so a 1 in 10-year event, the financial institution has the possibility to draw an emergency liquidity facility from EMF. If, in addition to this, the severity of the event is even higher, so let's say it's a 1 in 25 or 1 in 50-year event, we give the option of converting the emergency liquidity facility into Tier 2 capital, so subordinated debt that's supporting the capital structure of the institution. Finally, if the event is even more severe, say a 1 in 100-year event, we give the opportunity for partial interest and loan forgiveness. So the idea of all of this was to make sure that the financial institution has sufficient liquidity and remains solvent also in the case of extreme weather event, so that they can continue to support their borrowers and smallholder farmers. For this reason, we have also combined, together with this package, a technical assistance facility to help the financial institution design a recovery-based lending program so that they would continue to lend to the impacted borrowers. So clearly, the advantages for the borrower is that they continue to borrow. For the financial institution is that they continue to have access to funding at contained cost, and they can continue to grow and lend post-disaster and keep client retention. For EMF, of course, all of this results in decreased credit risk thanks to the NDF support. We have been happy to have concluded our inaugural credit transaction a couple of months back in Cambodia and look forward for more.
Eleonora, thank you. And I actually realized that I forgot to tell everyone that you gained a lot of experience working for many years for Blue Orchid, and that you also founded your own fintech in Myanmar. So you're very well acquainted with the region, you actually concluded your first transaction. Sorry about that, but
Thank you.
I realized it in time. So thank you. Over to you. I think now from this concrete initiative, maybe we open up a bit more to the ecosystem as a whole, because our theme is how can we get more private sector engagement into climate risk insurance into the space. So over to you, Felix, once more. How can we attract much more private investment in climate insurance in developing countries from a fund manager's point of view? What are the key points you see there?
Thank you. So I think overall, it's important to note that emerging markets at this point account for around 60% of global GDP, but only for 10% of insurance premiums. And if you look at emerging markets, what you have there in frontier markets in particular, what you have there in insurance is typically insurance for state-owned enterprises, the large corporates frequently active in traditional channels, and retail insurance has been very much neglected. And insurers are becoming more and more aware that if they want to grow further and if they want to grow faster than their local economies, they will need to include populations in the retail segment into their offerings. And bearing in mind then also that 40 to 60% of populations typically in the target countries for the InsuResilience initiative, 40 to 60% of populations depend on agriculture for their livelihood. I think it's clear that there's a big opportunity and insurers see that. So I think what is really needed is also, as Hector was saying, I think a lot of the thinking in terms of product structuring, risk capacity is quite advanced. And what we need now is really success cases that, entice other players in the market that work on the last mile to get into the space and then solve the last mile problems, right? And these are important problems. It's about really the right product design, education of clients, the mere distribution reach. So I think these are really important topics to roll it out, but to attract more capital, really, I think some strong success cases will go a long way.
Yeah, thank you, Felix. Actually, in the meantime, we have a couple of questions from the audience. One is that there is still many pitfalls to deal with for the scale-up of parametric insurance. That's actually Antonis Malagardis' point of view, who asked the question. And one of the pitfalls is to change the mindset of actuaries and CEOs to move from indemnity-based to index-based approaches or hybrid solutions. And his question is how to go about this huge challenge. Maybe that's a question to you, Hector.
Yeah, thank you. Actually, I was sitting with a CEO and a chief technical actuarial person from the #2 insurance company, actually in Mexico, and we were debating exactly that. And one of the things we realized that some of the aspects of the traditional insurance schemes, in particular, the payout functions and link how these traditional markets behave under certain events and conditions, that's not a lot of transparency, is really creates a situation where it's difficult to compare it to the parametric insurance offering, where you have a more transparent payout structure. It's actually reflected in the contract. So when it's difficult for CEOs of both insurers and beneficiaries, when there's not a lot of awareness of what the traditional products, how they work, what we call it severity curves. It means the relationship between the event and the payout. They don't have a way to anchor their expectations about what are the trade-offs of both products. So when you don't have that, usually you focus on the weaknesses of parametric insurance. It could be basis risk, but then all these other characteristics about transparency of payment, maybe more frequent severity curves that will allow to recover your premium through claims in more intermediate events. All that part of the offering gets a little bit kind of hidden from the view. So there's a lot of effort in trying to get all these case studies and document how each different product in the industry works and allow people to make these choices. The other part that is very important is we also need to be more open to explore different schemes. I think what Eleonora showed is how we need to think about parametric insurance or parametric risk transfer as a value contributor to other services, not only as an insurance supply chain or a traditional insurance supply chain. So you can add value into, for example, capital efficiency on insurance intermediation. So maybe we need to also move away from the idea that parametric insurance is about selling an insurance policy to the end client. It also has a potential value contribution to other services. So I think we need to expand our mind about how the product works, how it compares to existing products, what are the trade-offs, but also how we use it.
That's a very, very big task. And I can imagine that, you will have to fine-tune also all the arguments in order to convince the potential clients who are still in that sphere of thinking.
All right. May I add just one comment which comes to my mind? It is on the one, with respect to the mindset, I think there's a huge range, but at least I can say from our company, the mindset is fully there, and I believe that sometimes even easier to model a parametric cover if you have the good quality. But there's a very different aspect which makes sometimes things more difficult. This is the accounting and the regulatory environment. A pure parametric cover is often seen as a banking deal, and banking deals often have the flavor of gambling. And so the accounting regulatory considerations from this banking aspect are often drawn into this one. This is very different from accounting to accounting regime. It's very different from regulatory to regulatory system. But I think there's also some way to go in understanding that these solutions are basically insurance solutions. They are not gambling solutions. So also there is something to be done.
Yeah, building trust, no? But let me stay with you, Henning. What has been your experience in finding good initiatives to join for the benefit of serving the poor and the vulnerable? Are there more out there?
I'm sure there are more out there, and I know a couple of them, but I probably don't have the complete picture. So I maybe not the perfect person to answer this, but I would like to add an observation. And the observation is that a lot of these projects require a lot of work, time, and resources, application processes, application forms, until even the need to work on the initiative starts. Now, of course, I understand if public money, taxpayers' money is involved, you have to be prudently check whether the money is used and controlled in an effective way. But sometimes I feel, is this the right balance? And yes, from a private sector, you may say, if I now have to work 1 year on applications, and 1 out of 8 at the end will be successful, it may be a hurdle saying, okay, maybe we don't go for this one, we concentrate on other ones. On the NDF, something which I like, probably it's more the work of Hector and his team then, but the NDF is set up to cover a vast range of risks, a vast range of territories, and there's a lot of flexibility, which may be a bit easier rather than have one project where you have to work a lot on applications. I think there is a lot more in the world on opportunities. The public sector has things which the private sector doesn't have. Access to people, know what the people need, numbers, access to numbers, and so on. The question is how to come together. And we have a good example with the NDF, at least from our perspective. We would be very happy to engage in similar considerations. So I think there's a lot out there. The question is how to find the right parties to come together to make it happen.
Yeah, thanks, Henning. Eleonora, over to you. And the question, I mean, you are working with your clients, the microfinance institutions, etc. What what is the main aspect? What does it take to support the private sector in general to build more resilience to climate disasters? Are they aware of the risks they are facing to start with? How do you explain the potential products to them? What educational aspect is involved in order to increase their literacy? Let us have some insights on your work on the ground with the clients.
Yeah, thanks, Barbara. I think you got the main point. I would say we work with various stakeholders. Generally, they are aware of those risks. They face them regularly, but they are much less aware of the language, of the offer. Generally, there is an educational component that goes with it that in fact takes most of our time, and it's most of what we end up doing. So explaining how the products work and convincing that this is actually a valuable offer can be quite difficult. It's not only the marketing per se, but it's really the vocabulary and the key concept that needs to be understood. And this has been, I would say, so far the biggest difficulty on one hand. On the other hand, we're also quite proud to say that the CRED product we have designed and what we have implemented so far has been working fully on commercial terms, meaning no subsidies involved apart from the technical assistance component. And this was quite a big success on one hand. On the other hand, obviously, to make this product expand further and gain more scale and also start creating understanding and market, it would be useful to, in fact, get some of this support, at least to kick off this type of project. And as Philip was saying, creating a bit of success stories to further promote and expand this concept.
Yeah, thank you, Eleonora. Hector, maybe you let us learn a bit more about global parametrics approach in order to understand, okay, how can you be serving the ecosystem as a whole? Like, what's so special about the approach you have chosen and you contribute to this initiative?
I think what we realize is that a lot of our clients are solving complex problems. They are dealing with strategic planning for their own products, like Eleonora mentioned, or NGOs trying to deal with very complex operations on the ground. And one of the things that they're looking when they're trying to consider even the concept of financial engineering and even more specifically insurance, you need to try also to adopt homogeneous approaches. So there's a lot of emphasis in the industry to go very deep into resolution of, for example, in our case, of understanding risks. But then when you're dealing with these actors that they're dealing with multiple countries, and if it's too specific and they're not comparable, it's very difficult to integrate all this information into a coherent C-suite type of planning. So I think what we realize is for C-suites of all these organizations or institutions that have a footprint in poor and vulnerable communities, they really would appreciate to have consistency across how they should look at risk in a cross-boundary way, and they want to be able to compare countries in South Africa with countries in Asia, countries in Latin America, and being able to plan for that. So I think we consciously decided that these multi-country agendas can only be served if you look at the way you understand risk and the way you structure in a consistent way. So you facilitate the understanding cross-boundary, and you can start facilitating these multi-country, multi-risk holders to evaluate different actions. I mean, I think the technical aspect of this, of course, is relevant, but if you don't gauge it correctly, and you go too much into the technical side, you forgot the strategic side, and therefore you make it very difficult for a client to make any analysis useful. And striking this balance, I think something we need to strive for. There's still a lot to be done, but I think decision makers want to see like if they want to understand drought, they want to see drought in a way that they can understand the different regions and understand the threshold and the return periods in a consistent way. We need to simplify how people interact with the risk information and facilitate decisions.
All right, yeah, thank you. I think in the last, let's say, 15, 20 minutes, we can get a bit more visionary, because all of us are working on this initiative, the Natural Disaster Fund, in various roles. And yeah, given what we have exchanged on the specific contributions of each partner today, what do you think will the private sector involvement look like 5 years from now? Like, what are your hopes, your wishes? What is the key factor we still need to work on? Who are the stakeholders who might be interested? Anything is welcome. And I open the floor to everyone. Yeah, Hector, please.
I hope that as a community, we have the capacity to attract visionaries that are stepping up in trying to find different answers to their problems and how they can use insurance. I think we don't pay enough attention to these disruptive views. We put a lot of attention again into product and customization and certain sectors, but we don't have enough avenues for visionaries in different verticals, renewable energy, social protection, to really test different avenues. That's what I really liked about Eleonora's case study. It's about, okay, like I face a problem that is with the borrowers. I want to do it in a private way. I want to look at the structure. I look at my strengths. So they were not facing this problem by saying, I have to deal like everyone else, and I have to only think about how I sell insurance to the borrowers. They really sat on what were the strengths of the organization, what are the efficiencies that I can sell to them, how can I group risk. I mean, these issues that are beyond, again, product, but how we can solve the problem is pretty underlooked. I don't think we finance enough. I want to support these disruptive views to really help us test different approaches.
Okay, yeah. The private sector takes different roles. We learned about the capital provision, the risk-taking function, the development of methods, the marketing aspect, the bringing it to the final customers. So how can we get many more players into the sphere in those various roles? Like, Henning, what about your peer group of reinsurers? How involved are they already? How do you find their approaches, and who would you like to motivate?
As far as I know them, some of them are involved, and I'm sure others, if not yet, are looking into this one. Generally, I believe that the private sector is willing and also able to help. The question is how to bring in parties in order to get it done. Now, your question was the 5 years. 5 years sounds a lot when you look ahead. It's not a lot when you look back. And if I consider that the setup of the NDF has taken 2 years, and probably to get it really done with transactions almost 3 years, my forecast for the next 5 years is have a few more of such transactions in the world, and as more there are, as wider, of course, public awareness comes. I am a strong believer that the protection gap problem has a lot of elements. There are elements of, from a reinsurer perspective, of course, new and diversifying risk to work with. But from a political perspective, I think there's a huge interest from governments to slowly over time help people to stabilize their living conditions. And I believe these insurance solutions, parametric insurance solutions, can help. piece by piece over time. And if this helps that people stay at their homes rather than going to the bigger cities or then even going to other countries, there is a lot done. So next 5 years, a few more of these transactions. And I think generally, not just the reinsurers, but probably also the insurance community, there is willingness to work on these projects. And this is surely true for Hannover Re.
Thank you. Eleonora, what are you wishing for in order for your work to be successful with your clients?
Yeah, well, I would say before the wishes, I think we should also take into consideration a bit the impact of climate change, because that is also pretty significant. We are seeing it every day. McKinsey research shows that the value at stake from climate-induced hazard could increase from 2% of GDP globally to 4% in the next 30 years. So it's quite a significant increase. Of course, the next 5 years won't see such a large one, but still, we will see this trend, right? And so the climate insurance will be more and more relevant. And I mean, what we are all trying to do here in different ways is try to make it more accessible. One consensus that's there of various parties is that stakeholders demand for climate insurance to go beyond just the simple risk transfer and to move more into risk mitigation in various ways. So one can be, let's say, rebates for companies that invest in infrastructure to be more resilient to climate change. The other one is an example like ours, where we try to structure products around this to build the risk mitigation within the overall product offer. We try to play our role, and we hope that this will become more and more streamlined over time and also more and more widely understood.
Yeah, thank you. And Felix, over to you. You know what I would be interested in? I mean, we were already talking about the capital raising aspect, one of your functions, but then also the pipeline of investees, like how many global parametrics are out there and how many business models do you find as in the Resilience Investment Fund? And is there more to hope for, or what do you think?
Thank you. Before I answer this question, maybe just also on the previous question, I think Henning made a good point. 5 years is not much if you look ahead. That's certainly been the case if I look at back 5 years and so on. But what I would hope to develop over the next 5 years, and it would be coming back to the topic of success cases, right? That there are success stories out there, and that the market overall will move from, if you like, nascent embryonic stage to growth stage, and then probably 5 years will not be very much, and we could see a lot of change in a short amount of time. So hoping for that to happen in the next 5 years potentially, and I think a lot of the elements are in place really. In terms of how many global parametrics are out there, I mean, as an investor in global parametrics, I hope none or no other ones, but maybe Hector can answer the question for his field more specifically. I do think there are a couple of global business models out there, but then there's also, regional business models in individual markets that are very large. And of course, on the data structuring side and risk capacity, probably that's more constrained, the universe of required players. There are also reinsurers who have some of the similar skills, regional reinsurers in some of our regions. But then you have also more on the distribution side, the last mile side, you have important business models that are also technology enabled, really. And I think there's a lot of going on there, and I think there's a lot of growth also, and primarily driven by other products than agriculture insurance and risk coverage for climate risk. But I think there are valuable channels being built that can be used for those products. So more on that end of the value chain, if you like.
Okay, so I get it that you're hopeful that there is a lot of innovation going on also in the space so that you don't run out of investment opportunities. That's good to hear.
Yes, that's not our worry at the moment, unfortunately.
That's good to hear. So there's one question from the audience to have a shot at. Parametric solutions remain as pilots with very limited use geographically seen. If public sector plus regulators do not endorse fully parametric approaches, we may not see progress in climate risk insurance. That's the position. So is this view also shared by our speakers? So who would like to comment on that one? Hector.
I think I want to come back to my earlier comment that if we open our horizon to different way of bringing risk transfer products, for example, in the case of Eleonora, they're not selling an insurance product, so their product is not with the insurance regulator. It's coming through the funding. So if we embed it in different ways, I've been talking with banks where they're talking about partial guarantees supported by contingent climate component to promote lending. So I think we need to be open to the fact that in some cases, selling an insurance policy or going through the traditional supply chain might not be necessarily the most promising approach to scale up. There's other ways, or if hedging is being bought by NGOs, but they're not selling a policy, it's about for them to be able to have liquidity and respond better. There are different ways to bring these contingent capital needs into the economies. So we need to look much broader than the insurance supply chain. And I think we lack imagination. And the roadblock is usually, well, the local regulator is very concerned about the insurance, parametric insurance as a retail product. And they have a very valid point about that because of potential basis risk and the implication for at the micro scale. But sometimes that conversation really moves us from the target. The target is how do we provide contingent capital needs to economic agents that have a large footprint and poor and vulnerable. And this is where multilateral banks also, or bilateral banks can play a role. They can convert these insurance products into different financial products. We need to look this more like systematically as a family of financial products rather than standalone insurance. Otherwise, I agree, we're going to hit the same wall again and again and again.
Yeah, Henning, please.
Yeah, this reminds me to one of my comments early on. The form of parametric cover is probably seen by many as a derivative. And a derivative is regulated by the regulator who oversees the banking sector. And it falls into very different logic compared to the regulation for the insurance or reinsurance industry. And I think here are hurdles which would be good to overcome. It's very different from country to country at the end. And the same is true for accounting. And I think it would be good that all participants, including regulators, accounting parties, could somehow agree that these solutions are in substance insurance solutions and should maybe not fully go through the same considerations as you have with pure derivatives if you want to hedge currency risks or oil prices or something like this. So I want to re-emphasize what was said here in the chat room. Yes, regulatory and accounting treatment can be a hurdle in my view, which is a pity.
And are the right people already talking to each other? What do you think? I mean, then the private sector would have to explain to the regulator what it takes in order to overcome the different languages of banking on the one hand side and insurance on the other hand side. Are the right people already exchanging their expertise? Because that's what it takes, right?
If I take this, I do not know, but I would imagine rather not, because this now is a more fine-tuned or a smaller question in the overall scheme of problems we have in the world. So I do not think, and at least I have not heard of, that this has been discussed to greater detail.
Eleonora, what's your local experience with these types of issues, regulatory issues in introducing new products with a parametric component?
Yeah, thanks. A non-negligible issue, I would say, because insurance is very regulated, and we are working now with what is a hybrid type of product. So we had to structure it in such a way that it would work. So basically, we stripped away references from insurance, which is in any case on the back end and which applies only to our fund, and structure our products as pure credit products with contingencies. But yeah, that per se has been actually quite a lot of legal work. And that's also, I think, a first step, but it's a type of work that will need to be refined. There is so much more to do on our side to make it more digestible, but also to, again, as I was saying before, to create knowledge and understanding of this in the market. So, yeah.
All right. I learned a lot today from your different perspectives on the matter, and it was also very concrete comments, and it was also easy for me to read how your experience actually brings you to these positions. So I would really like to thank you for this very, very lively discussion and all your inputs. I would like to thank the audience for the very good questions, and Hector, actually, you got a lot of applause. Daniel wrote in the chat for your answer to one of these bigger questions on parametric approaches and the hurdles. That's also nice to know. I would like to close this by saying that all your perspectives enhanced my insights into the matter. And we are hopeful for the next 5 years. We don't wish for too much, Henning. I think your comment looking at what it takes to actually develop new approaches, concepts, and asset classes for these complex types of projects was well received. So we are not imagining for too much, but still we want to jointly work on this, ensure the poor and vulnerable against increasing climate risks. We hope for a good COP in Glasgow to bring good milestones and concrete results. And with that, I would like to say goodbye and invite everyone to grab a coffee before the live stream will continue. Thank you.
Thank you.
Well, that was a very, very good suggestion just now in one of the breakout sessions to take a short break and grab a coffee, because that is exactly what you can do now, depending on what time of day it is, of course, where you are. So those breakout sessions are coming to a close now, and we take a very short break because I think we all could do with one. From what I've seen, you had very lively discussions and again, digging very, very deep. So in 15 minutes from now, no matter which time zone you're in, just look at your watch right now or the clock on the wall. In 15 minutes, we continue here when I will introduce the second round of our breakout sessions, again outlining what they are about to help you make a choice. So enjoy your break, relax, recover, and see you in 15 minutes.